Hello, today is Monday, June 8th, 2026. Here is your daily signal. Gold prices have plunged, driven by strong U.S. jobs data that has sparked expectations of Federal Reserve rate hikes, according to Bloomberg. The background is that the U.S. labor market has shown continued strength, with unemployment rates hovering near historic lows in 2024, and Federal Reserve policy remains closely tied to employment and wage indicators, meaning that strong job numbers can influence interest rates and subsequently impact global commodity prices, including oil and metals. As reported by the U.S. Labor Department, non-farm payrolls increased by 250,000 in May, and Federal Reserve officials have made clear that no rate cut is expected soon while wage growth and low unemployment persist. WTI crude oil prices also rose 1.5% after the jobs report, reflecting greater demand expectations. In the near term, the robust U.S. labor market may postpone Fed rate cuts and keep borrowing costs elevated, both domestically and internationally, while medium-term effects could include a firmer dollar and heightened pressure on commodity prices and emerging market currencies. As trade partners adjust to tighter U.S. financial conditions, global growth projections may be dampened, with commodity exporters benefiting from increased demand but facing volatility tied to Fed policy shifts and dollar fluctuations. Moving to fiscal policy and mortgage rates. Fortune reports that government fiscal policy, including Trump's new tax and immigration megabill, is pushing the U.S. Treasury to issue record amounts of new debt, sending 10-year Treasury yields higher and keeping mortgage rates elevated at 6.48%. The context is that federal spending and tax decisions directly impact the national deficit and borrowing needs, and fresh Treasury debt increases the supply of government bonds in markets. Rising government borrowing puts upward pressure on Treasury yields, which are closely linked to increases in long-term mortgage rates. To illustrate, the Wall Street Journal notes Treasury yields hit 4.50% after a $150 billion debt auction, propelling the average 30-year mortgage rate to 7.2%, while Bloomberg highlights that persistent deficits and a record $34 trillion national debt are fueling further upward pressure on mortgage rates. If fiscal deficits and debt issuance continue at this pace, mortgage rates could surpass 7.5% in the near term. That would reduce housing affordability and slow home sales, with homebuyers and those seeking to refinance most directly affected. Over the medium term, higher government borrowing costs could crowd out private investment, and increased debt servicing expenses may restrict future fiscal policy flexibility. Finally, on AI-driven innovations in developer workflows. Hacker News features Cedra, a mobile control plane for AI coding agents, as well as new cost-saving techniques for deploying coding agents, both signifying rapid innovation in this space. AI coding agents are designed to automate code generation, debugging, and review by leveraging large language models such as GPT-4, Claude, and Gemini. Since 2021, the likes of GitHub Copilot and OpenAI Codex have shifted developer productivity and software practices across major tech firms. Reports by McKinsey and O'Reilly have detailed how these tools impact job roles and project timelines, and their expansion has been fueled by improved foundation models since 2023. Today, Microsoft, Google, and OpenAI are at the forefront, while Amazon, JPMorgan Chase, and Stripe are deploying these agents at enterprise scale, with Stanford and MIT publishing research on accuracy and productivity impacts. On June 8, GitHub announced Copilot Enterprise now supports 30-plus programming languages, widening its reach. The Wall Street Journal highlights Google rolling out new enterprise pricing for Gemini Code Assist to accelerate adoption among Fortune 500 companies, and MIT Technology Review reports MIT's AI Policy Lab found a 35% reduction in code review times thanks to advanced coding agents. Looking ahead, software teams can expect faster delivery cycles and lower costs, with job descriptions evolving as agents tackle routine and complex tasks. In the medium term, the outsourcing market may be disrupted and demand for AI-literate engineers will grow to oversee agent performance. Widespread adoption could raise concerns over code security, intellectual property, and reliability, prompting regulatory scrutiny, and the shift may also drive software engineering education toward prompt engineering and AI oversight. Now, onto the markets. In international markets, Netherlands surged with a daily rise of nearly 1.6%, boosted by EWN as the top gainer, while China large cap dipped about 0.2% and FXI was among the weakest. Commodities saw U.S. oil climb over 1.6% led by USO, while platinum dropped 1.6% with PPLT as the session's laggard. In the favorites group, AMD jumped over 5% and Intel outperformed with an impressive 11% gain, but Adobe declined about 2.6%, making it the worst performer in this list. Meanwhile, Nvidia rose nearly 1.7%, while Microsoft slipped by about 1.2%. In the U.S. sectors, the S&P 500 edged up slightly, and SOX outshined with a daily gain of 5.9% representing strength in semiconductors, although real estate pulled back 1.5%, with XLRE as the top loser. Among the most active movers, FAC soared an astonishing 4,576%, while RMSG dropped nearly 60% as today's sharpest decliner. That's it for today. You can find more news and details on our website. Goodbye.